Welcome to our channel. If you want to invest in mutual funds, follow these step-by-step instructions to access professionally managed, diversified investment portfolios. Step 1. Understand what mutual funds are and how they pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities managed by professional investment managers. Step 2. Learn the difference between actively managed funds that try to beat the market and passively managed index funds that match market returns. Index funds typically charge much lower fees. Step 3. Research mutual fund performance over multiple time periods rather than focusing solely on recent results. Look at 3, 5, and 10-year returns compared to appropriate benchmarks. Step 4. Compare expense ratios among similar funds as fees directly reduce your returns. A seemingly small difference in annual fees compounds dramatically over decades of investing. Step 5. Check minimum investment requirements, which vary widely among mutual funds. Some funds require thousands of dollars to start, while others have low or no minimums, especially in retirement accounts. Step 6. Understand the fund's investment strategy, holdings, and risk profile by reading the prospectus. Ensure the fund's approach aligns with your goals, timeline, and risk tolerance. Step 7. Open an account directly with the fund company or through a brokerage platform. Then set up automatic investments to build your position over time through dollar-cost averaging. Don't forget to like this video and subscribe to our channel.